Hello, welcome back to Business Consulting. Today we have brought you another financial model. This one is Music Festival Excel financial model. As you can see, this model tells you about the highlights on the input sheets as well as the revenue analysis, marketing budget, and financial statements and financial analysis. As you can see in the input sheet, it tells you about the funding assumptions, revenue and cost assumptions, customer and marketing assumptions, as well as capex and opex assumptions and working capital assumptions. All the gray cells are, as you can see, are changeable cells. You can change them as you want, whereas the gray cells have formulas in them which are not changeable. Coming towards the revenue analysis sheet, this tells you about the total revenue that the company is earning in the next 5 years in yearly and monthly form, as well as the cost. Coming towards the marketing budget tells you about the marketing expenses of the company in the next 60 months. Then comes the startup summary. The startup summary tells you about the company's fundings, expenses, assets, and liabilities and capitals in the first year of the company. And it also tells you about the total additional funding that would be required for the functioning of the company. Then comes the financial statements. These include the income statement, cash flow statement, and balance sheet. The income statement tells you about the net income of the company generated by the company in the next 5 years in monthly and yearly form. Then comes the cash flow statement, which tells you about the cash inflows and outflows of the company from its operating, investing, and financing activities. These are also based on 5 years, monthly, and yearly basis. Then comes the balance sheet, which tells you about the total assets and compares them with the company's total liabilities and equity, which tells you about the company's financial position. Coming towards the financial analysis includes the break-even analysis, which tells you about the break-even sales of the company. It also tells you about the company's valuation, that is the company's WACC, weighted average cost of capital, and the expected equity percentage that can be offered to the investors. Then comes the sensitivity analysis, which tells you about gives a scenario-based analysis on 3 different scenarios, that is actual, optimistic, and pessimistic. Then comes the KPIs and ratios, which highlights the financial ratios of the company: profitability ratio, liquidity ratio, solvency ratio, and efficiency ratio. Then comes the 𝐶AC-𝐶LV analysis, which tells you about the customer acquisition cost and customer lifetime value, and the ratio of 𝐶AC-𝐶LV. Then comes the working sheet. The working sheets have all calculations that are being used in the financial statements. This includes the employee payroll, operating expenses, the depreciation schedule or lease schedule, loan schedule, and working capital as calculations. The last sheet includes the dashboard, which tells you about all the information in graphical form. As you can see over here, it also highlights the main KPIs of the company. That's it. Thank you. This is the end of the video. Thank you for watching. Hope you like it. Please subscribe and follow us. Thank you.